Hello traders, I'm Cory Mitchell with TradeThatSwing.com, and in this video we're going to look at setting daily stop losses while day trading. We're also going to look at loss from tops, how we should handle those. Why have one? As it said on the front page, don't let a single day ruin your week or month or life ever. Bad days are going to happen, but we can control what those bad days look like. Generally, there might be the odd day where price gaps through us and we end up losing more. But for the most part, those are extremely rare circumstances while we're day trading. So we can control our risk, and we always want to be doing that. The rule of thumb is always live to trade another day. If we're not doing well on a particular day, just stop. If we do this, there'll always be another day. There'll always be a tomorrow for us to trade and make that money back. But if we don't stop, if we keep pushing and taking bigger and bigger losses, we're eventually going to blow up. There's going to be no trading tomorrow for us. We're going to be done. It's going to end careers. I've seen guys who've traded for a long time and they let one day get out of hand, and that was it. So at the end of the month, I like to think of it this way. If you get stuck kind of thinking like, I'm down, I want to make it back, think about the bigger picture. Project yourself forward to the end of the month, and you're sitting there doing your review of your trades, and it's like small daily win, small daily win, small daily loss, big daily win, small daily win, big daily win, small daily loss, hit a stop loss, big daily win. That's all fine. Nothing's gonna really be like scary to us. But if we have a really big losing day, that is gonna stand out like crazy on that review. Because I don't know, I've heard it countless times from myself, every trader I know. If I just didn't have those two really bad days or that one really bad day this month, I would have had a phenomenal month. And we just always say it. It's like, so if we can control that narrative, if we can control that one daily loss that gets out of hand, that can have a huge difference on our monthly P&L. So let's get to how we calculate daily losses, ways to do it. This would be for most people who have a somewhat profitable system but are looking to implement some more risk management. Look at what your typical winning day is, and that's your max loss. It could be in dollars, R, percent, doesn't really matter. Something easy for you to know while you're trading, kind of where you stand based on that level. So if your typical winning day is $100, then you would stop yourself out if you're about to lose $100. If your typical winning day is $1,000, then you would stop it when you're losing about $1,000. The reason for this is because then it only takes one winning day to make back a losing day, a really bad losing day, right? One typical winning day makes back a really bad day. If our losses start to get bigger than our wins, now we're looking at potentially having to have two pretty good days or three pretty good days just to make back one bad losing day. So we want to avoid that whenever possible. I would take an average over the last month of your average winning day, but calculate it weekly. You only need to calculate it once a week. So look at what you did over maybe Sunday night or Monday morning. You look at kind of what your average profit is over the last month on your winning days, and that would be your max daily loss for the upcoming week. A different way to do it is to risk a percentage of capital or a dollar amount. Like I said, R, percent, dollars, doesn't matter. And this is going to be more beneficial it's going to be really good if you're just starting out, because then you can risk a small percentage. So you can see I have a couple different ones. So 3% up here would be for someone who's a good trader. They have a strong track record. because 3% losing up to 3% a day is a fair bit. So if you're losing all the time, losing 3% a day could deplete your account very quickly. So if you're still losing a lot, your trading is not quite where you want it to be yet, you're not consistently profitable, I'd probably be more in this, I'd recommend being in this ballpark, 0.3%, maybe up to 0.5%. But you would want to be risking less than 1% per day. So whatever percentage you decide, whether you're a more experienced trader that's really profitable, then this would be, you could risk up to this. Doesn't mean you have to. Just 3% would be the max daily loss. Or you're at the 3%, 0.3% if you're just starting out. That's your daily max loss for the day. So you would just multiply that by whatever your account size is, and that's your risk limit for the day. This smaller amount for when you're starting out just helps you preserve that capital while you're learning, while you're still losing, and then eventually when you become profitable, you start to see some consistency, you can start bumping this up, 0.4, 0.5, 1% a day, 2% a day. Take whatever this amount is and divide it by several trades. If you have a high win rate, so let's say you decide to go with this way. You're going to risk 3% of your capital a day. You tend to have a pretty high win rate, not like a ton of losing trades. Maybe you just divide this by 3. So basically you're going to risk 1% per trade. If you were to have 3 losses in a row, you'd be done for the day. And that's how you could trade. Or maybe you have a little bit lower win rate. You could say maybe you divide that 3% by 6 trades. Then you're going to be risking 0.5% per trade. It would take 6 losing trades in a row in order for you to hit your daily stop loss. Same would go for the 0.3% or 0.5%, 1%, wherever you want to fall. So let's say we go with this 0.3%. If you're at that level, you're probably still having more losses. So I would divide that by, let's say, 6 trades. So, you're going to be risking just 0.05% per trade of your capital. And it would take 6 losing trades to get to that 0.3. And that way, just a couple losing trades isn't going to stop you out. So you do have to consider kind of what your win rate is a little bit. You want to allow yourself time within this overall daily stop loss to get some winning trades. So yeah, consider that as well. If the daily stop loss is hit, you close out, you're done for the day. No thinking about it, questioning, giving it a little bit more time. If you're in a trade and you can see you're like butting right up against that daily stop loss, or it's coming at you quick, that stop loss should be there at that daily stop loss. So if you're kind of letting it flutter and hoping it comes back, that stop loss should be right there so that if it does start going the other direction against you, you're not going to lose much more than your daily stop loss. Because again, losing a lot more than your daily stop loss is going to really stick out at the end of the month. Can destroy a whole bunch of profitable days. So we don't want to lose much more than our daily stop loss. We also don't want to hit our daily stop loss necessarily if we can help it. The only time I want to hit my daily stop loss is, so when I was trading Forex, I'll often use this, the 3%, and I'm risking 1% per trade. So the only time I would hit my stop loss is when I really loved all 3 trades I took. Like I took the first one, I was willing to risk 1%. Hey, it lost, that's fine. The next one I took, I really liked, I was willing to lose 1%. When I'm down 2% and about to take a third trade, I really have to consider, do I want to take my full position size on this? Because if I lose, I will be done for the day. So that's the only time I'd hit my stop loss, is where it's like, I love this trade, it's worth the risk, and if it stops me out for the day, then so be it. But let's say we're down 2% and we're risking a percent to trade. Our stop loss is 3%. There are choices there, right? You're down 2%. You could take that next trade. If it loses, you're done for the day. Or you could cut your position size in half. Now it takes 2 losses for you to be done for the day. And it gives you a bit of time to fight back. You could even divide it by 3, risk 0.3%. That way, you'd have to lose 3 more trades in a row. If you get a couple winners in there, now you might only be down 1.5%. Your daily loss is 3%. You're starting to fight back. Now you can start ramping up your position size a little bit again, pushing toward that break even and back into the profit. So I'll play with that level. And a lot of traders, at the firm, the idea was I was a prop trader for many, many years. And the idea was you don't hit your stop loss. Like you don't want to hit it. So, and again, unless it's like a phenomenal trade and you're willing to risk it. But ideally, you're getting close to that stop loss, cut the position size, fight back a little bit. Give yourself some wiggle room. A daily loss from top can also be used. So whatever this number was for your daily max loss, whether your average day is $10 or $100, or you're risking this percent, 3%, or if you're starting out 0.3% or 1%, whatever you decided, that can also be a loss from top. So let's say for me, my daily risk limit is 3%, or 3R if you want to think of it that way. And the day starts out really good and I'm up 6R or 6%. Then I drop down to 5R, 4R, 3R. That should be done for the day. Because I've basically hit my risk limit, but from the high threshold. And the reason we would have this rule is because we don't want a good day to turn into a full stop out day. That's like the worst mental thing that can happen to us is if our daily stop loss is 1,000, we're like up 1,000 or 2,000, 3,000, 4,000, whatever it is, and then we end up down $1,000 at the end of the day. That is super destructive to our psychology. And at least for me and almost every trader I know, that's like just can send you into a tailspin. So I don't. If you're having a really good day and it comes back by the amount of your daily stop loss, I would consider stopping for the day. Again, you can have that wiggle room. So let's use the example. My daily stop loss. Let's use dollars this time. My daily stop loss is $1,000. But the day starts out really good, and I'm up 2,000 and 2,500, 3,000, and then it starts sliding the other way. I'm up 2,600, then I'm up 2,500, then I'm up 2,400, 2,300. It's moving down. And it's moving toward that $2,000 level. That's 1,000 below my high point, which would typically stop me out for the day because it's like I don't want that really great day to turn into a bad day. And I've lost a fair bit, so maybe the trading isn't going as well, maybe the market's not as good, whatever it is. Something's happened. We had a great day going, and now it's turning around. So as I approach that loss from top limit, I can once again play with my position size a little bit. So let's say I was up 3,000 and I've fallen to like 2,200. So I'm 800 down from my max. My max loss from top is 1,000. I'm down 800 right now from top. Still up 2,200 on the day. Good day. Instead of just continuing to hit full position sizes, I could scale back a little bit, right? And then try to make some money. If I keep deteriorating, then I'm done for the day. But if, I can build up, maybe I get back up to 2,500, 2,600 by, kind of fighting back a little bit, smaller position sizes, getting some wins. Then I have more room, right? Because my high was still 3,000. My exit point for the day is at 2,000. And I'm now up at 25, 2,600 again. So I'm in that, I got lots of room, right? So now I can start amping up my position sizes again and trying to make more, pushing beyond where I was before. But we want to protect getting stopped out for the day if we can. If we hit our daily loss from top, just close it out, done for the day. As we're approaching, as I said, we can reduce our position size, fight back a little bit, try not to hit our loss from top. Some caveats to all this. Not everyone trades the same way. So these rules, these types of things work well for how I trade. They may not work well for everyone. I don't know how most people trade. These were basically the rules that were implemented at the firm, at the trading firm. It's like we had set limits. You couldn't go over it. If you were kicked out of the software. Position was closed. If you hit your loss from top, same thing. So, yeah, I mean, you have to control your risk somehow. The one situation it may not work for is if someone has an extremely low win rate, but they have a very high risk reward. So they may lose, but then they make it all back in one trade plus more. And that would be really, to be stopped out and have to stop trading, that would not be ideal for them. My rebuttal to that would be, though, is if you know it's going to take typically 7, 8 losing trades before you get the winner, you would just divide whatever your amount of your loss divided by 7 trades. So if you're willing to risk 2%, 3% a day, you would divide that by, let's say, 7 or 8 trades, because that's typically, you could easily have 3 or 4 losses in a row before a win. So factor that in. We can't just always be making the excuse that, well, I only win every once in a while, so I'll just lose whatever amount each day until that big win happens. You can do whatever you want when you're trading at home, right? No one's going to stop you from losing a whole bunch of money every day. But if you worked at a firm or anything, there are risk limits you do have to stay within. And so even with that very high risk reward, very low win rate, all you would do is multiply or divide whatever your stop loss amount is by more trades, just to give yourself that room, flexibility, and time for those profits to materialize. So look at your trading, see what works for you, find the balance. We're finding the balance between managing our risk, but also giving ourselves time to find those profits based on where we're at. If you're starting out, keep that daily risk very low. If you're a little more experienced, seeing lots more profitable days, I'd go more off what's your average winning day and use that as your daily stop loss and your loss from top. Come join me, tradethatswing.com. Loads of free articles and resources, full trading courses, coaching. If you like this video, hit the like button and subscribe for more. Happy trading.